Hello everyone and welcome back to the Global Business Update with TA. Well, it looks like the food prices are increasing, in fact spiraling at a massive rate that some of the top popular restaurant chains in Australia such as KFC are having to let go of some food items and replace them. For example, KFC in Australia have decided not to use lettuce and shift to cabbage simply because the lettuce prices have gone up at a tremendous rate. And this is just only one instance and one particular type of food where the prices have gone up. In fact, pork is becoming so expensive and unaffordable to people that chicken is becoming a more popular source of protein even in some of the top developed markets and growing markets such as China and Brazil. Well, looks like the global food shortage is here to stay for some time. Meanwhile, we see that certain African nations are being hit by a massive dollar shortage, not only a Sri Lankan problem. Some of the top edible oil companies in Kenya, such as Pwani Oil, have decided to shut down some of its operations simply because they are unable to pay for the input or the ingredients in order to be involved in the production of the edible oil. And we also see that some of the other African nations, such as Ethiopia, are badly hit by surging inflation, and all of these are creating a massive shortage of the hard currencies and pushing them to adopt cryptocurrencies more. The mobile operators or the telecom operators around the world may be not having the best of times. In fact, even in some of the countries like the Democratic Republic of Congo, they have decided to include a massive surcharge tax on the mobile operators. They have been given the notice. Some of the leading mobile operators such as Orange and Africell and so many others have been asked to pay up their taxes, and there's a new surcharge tax that have been added to them. In fact, Democratic Republic of Congo is yet another country where years of mismanagement and political corruption has led to the economy being in doldrums, and President Felix is desperately trying new ways to boost up the revenue of the government. India is once again in the news for all the wrong reasons. Boycott India products, stop insulting Prophet Muhammad are some of the hashtags trending in the Middle Eastern region, as there are concerns about some of the comments made by the members of the ruling BJP about Islam and also about Prophet Muhammad. Well, where will this really take India to? Right now, India seems to be on a very strong footing economically, but and at the same time, they do account for more than a tenth of the trade among the South Asian region. However, if the demands do continue to grow at a time that India was in the right place to exploit some of the opportunities to explore the wheat market in Middle East, this definitely comes in as a wrong blow to them. In the world of global financial markets and financial institutions, we are getting mixed news about the employment potential. It looks like Credit Suisse is actually slashing jobs due to some of the tough times ahead and due to drops of investments. However, Citigroup has said that they are keen to recruit around 3,000 plus more new members into their ranks and cadres, especially to be spread around the Asian region, including Hong Kong, Singapore, India, and so on. With some of the recent developments in the global economy and with many economies running into some tough times, investments are not the most booming area right now. However, Citigroup seems to be having a plan, and all of these are coming amid certain developments such as HSBC looking at spinning off their Asian operations, which they believe will remove some of the barriers towards capital expenditure and in fact release some of the reserves they have and enable a $1 billion opportunity for the HSBC's Asian operations, which has been doing quite well over the last few years. It seems like that will enable them to use some of those funds and even go for an IPO and enable more investors to come on board. A lot of turmoil and chaos, but as they always say, in every chaos there is opportunity. The year 2022, especially the summertime, was supposed to be when European travel was set to return. But instead, the European region is being badly, travel in the European region is being badly hit due to various strikes, protests and labor shortages as well. And so much so, some of the airlines like Lufthansa have already said that they are reducing around 5% of their flights in July. And recently, KLM had to shut down around 85 flights on a single day simply because of the strikes and protests at Charles de Gaulle Airport in Paris. the summer was supposed to be where European travel was set to pick up. People were waiting to travel after years of the pandemic, but once again, misfortune strikes at the wrong time for them. And finally, with the interest rates in the US Federal Reserve spiking to levels that we have not seen over the last 10 years, globally, the stock markets seem to be heading towards what we call as a bear market. We can see that Nasdaq is down by more than 4.5%. Bitcoin have slumped by more than 20% within the last week, and we see it hovering somewhere around 21%. Even the yen is down to unprecedented levels of being at a low of more than 24 years. And with all these developments happening, one could clearly say that even some of the really big believers of crypto are now questioning, should we really go for it? According to some analysts, crypto may be closer to hitting the bottom even than the stocks. That's it for this week, and no matter what business you may be in, have a profitable week ahead.